kind of adoption?
We have next panel focusing also on the DeFi world, which is DeFi innovations that advance bringing finance to DeFi and improving inclusion. And the moderator of that panel is Mark Greenslade from Casper. And Mark, you can introduce your panel, and let's go at it.
Hello, welcome to this session around ACTUS, DeFi and inclusion, financial inclusion. So the theme of the conference is ACTUS Inside, and we want to illustrate an actual application where ACTUS is inside. We've heard about climate risk today. Communities across the world are suffering, will continue to suffer, and they need help. And we need to get liquidity out there into their lives. And so we're going to try and use ACTUS to do that. And so we're going to have a little journey. We're going to have a series of micro presentations, try to keep things fresh. You know, it's been a long day. Try and kind of stimulate you at the same time as educate, perhaps. So the first kind of mini presentation would be by myself. Proceed to Quinn, then to Maya, then to Jan, and then to Melini. When everybody has their little mini presentation, they'll introduce themselves very briefly and then kick straight into their kind of presentation. So myself and Mark Greenslade, I'm head of research and development at Casper Association, which is a non-profit based in Switzerland. We build blockchain technology or distributed ledger technology, as could be said. And so this concept, underpinning the kind of concept that we are rolling out, in actual fact, are verifiable financial contracts. We take ACTUS, we take a form of cryptography called zero knowledge, or ZK, and then combine this with distributed ledger technology or blockchain, and we come up with this notion of verifiable financial contracts. And this concept has three pillars: integrity, tokenization, and payments. The foundational pillar is integrity. So at the top of this kind of deck, you can see that we have the ACTUS standard and the set of informational artifacts that come out of that standard. Counterparties, typically identifiers over the counterparties, term sets. So for each of the financial contract types, you have the term set associated with that particular type of contract. Then the algorithms themselves, which you've heard a lot about today, and then the cash flows, which will see the output of the algorithms in response to the inputs, which are the term sets. So we want to, over the set of ACTUS artifacts, we want to take cryptographic proofs, whether those proofs are digital signatures, they're attestations, or they're fingerprints maybe, or hashes over data. They're also ZK proofs, and these ZK proofs are kind of the secret sauce of this solution, really, because they are giving us a certitude that the algorithms were correctly executed. We have certitude over the term sets because that's just, taking hashes. We've got certitude over the counterparties and the agreements they came to because they've issued signatures and attestations, but it's the use of zero knowledge cryptography which gives us certitude in the correctness of the algorithms themselves and thereby the correctness of the cash flows. And we simply use a blockchain in this context to record those proofs. So it becomes an integrity layer. So all the financial contracts being issued by major financial institutions that post cryptographic proofs to this kind of system would have a degree of certitude, I believe, or we believe, that hitherto they do not have. Another element of this solution is tokenization. So minting of tokens using a smart contract platform. It's not about tokens as assets, it's about simply tracking exposure or obligations of counterparties on the different side of the financial contract that they may be participating. So if it's a loan contract, there's on the issuance side, and then there's on the holder side. So it's really tracking exposure to financial contracts and then providing upstream tooling and ecosystem for auditors rating agencies, regulators, markets, so they can get some kind of insights into the risk exposure of portfolios. And then lastly, payments. So because we're processing the ACTUS cash flows, we can now build a payments engine, could be a hybrid engine, doesn't need to use blockchains to actually service the payment engines, but can use a blockchain as an orchestration mechanism. So we have some principles. Occam's razor is like as little as possible, much as necessary. You do not want to use blockchains to put lots of data. You simply put fingerprints of data. We want to be chain agnostic, so we want to have a kind of second order layer of standards rolling out across the kind of DeFi space. Privacy preserving, super important. Trust but verify. So, cryptographic proofs everywhere. And we have challenges. Regulatory certitude, big challenge. Counterparty risk, this is a risk-first system, not risk-last system. Post-quantum security, we've already heard about. Jurisdictional anchoring, so touched upon in the previous session that, no financial contract is issued in a jurisdictional vacuum. And so we do need to anchor all these financial contracts in legal environments. And then lastly, just managing technological flux when you're trying to build a multi-decadal system. So that's verifiable financial contracts, taking ACTUS plus zero-knowledge cryptography, plus blockchains, and trying to build, let's say, a substrate of a slightly different way of doing things. So now I'm going to pass the microphone over to Quinn Doherty, who's a member of the R&D team, who's going to talk about different approaches to the algorithms themselves.
Hi, I think I'll use this one. This is a little better. Okay. So here at Casper Association, one of the projects here is trying to take a model checking view of finance, which model checking is relatively widely used in finance, but I haven't seen it in like ACTUS-like scenarios where you can, break down interactions into atoms and then put them back together by composing together the primitive parts, such as PAM, such as annuity, and so on. So the abstraction that we use is just automata. This, for example, is the automata representing a vending machine. You can see that you take an action, which is an arrow, and it sets it into the state of retrieving the soda. Then another action sets it into the state of dispensing the soda. This is the model of computation that you would use in formal verification of reactive systems and systems that are amenable to effectively model checking. So for example, we can see PAM, principal at maturity, as such an automaton, where the interest payments will repeat. You can see that there's a self loop up there until the clock has been incremented up to above the maturity date, at which point the maturity happens, and then there's the principal repayment. So the clicker, on the other hand, okay. So what is a reactive system? A reactive system is a software system embedded in an environment that responds to sensor input. And the analogy here is that the stream of observables, like a varying interest rate over time that you're reading off of the market. This is effectively, in the analogy, kind of like a traffic light system that is reading the camera input of all the cars coming through. So examples of reactive systems are traffic lights, airplane autopilots, a fitness tracker on a smartwatch, or a cruise control on a car. And the advantage of this analogy is we get like a large software stack, and there's large software ecosystems on formally verifying implementations that can sort of fit into this way of thinking about them. What is formal verification? Formal verification is a very extreme case of quality assurance. So we would like a very extreme case of quality assurance because, there's bajillions of dollars on the line. So to this end, what I've been doing is I've been representing ACTUS contracts as specifications in temporal logic. Temporal logic is a logic aware of time step. And you can capture important properties that you might care about, like the correctness of the contract, in what is called a specification. A specification is just a formula in the logic. So this diamond means diamond maturity means eventually maturity. The box means always, the circle means next. There's a set of things you can do to learn to read these formula, but effectively they specify when the contract is correct, and you can also specify other sorts of properties that you might be interested in, such as safety, nothing bad ever happens, or liveness, something good eventually happens. And that, I believe, is, I double clicked. Yes, so thank you very much.
Okay, great. Well, thanks. That's a new approach to actually implementing the algorithms using linear temporal logic. So thanks so much, Quinn. Next, we're going to move on to Maya, who's going to talk about the use of ZK and compliance.
Hi, everyone. Yeah, I'm excited to talk about zero knowledge for automated regulatory compliance and kind of speaking about it from the perspective of people who are building blockchain technologies and are in the DeFi ecosystem. Okay. So, yeah, we hear about DeFi a lot, and people in the crypto space talk about how much value is locked in. But when we look at it relatively, and as we've been talking about throughout this conference, it is really eclipsed by the amount of value locked in traditional financial markets. So as we can see, the value locked in DeFi is 50 billion. Global FX markets are 753 billion. Global repo markets, 13 trillion. And then global fixed income securities markets are 119 trillion. However, a lot of the technologies that are being built that will proceed to support, for instance, repo markets, are coming out of a relatively small space. Yeah, as we think about the small space, we actually run into data privacy regulations, including the GDPR, which kind of articulates that we're going to have one data controller, a right to data erasure, minimal data processing, and requirements around cross-border transfer. The GDPR kind of sets the tone for a lot of global regulations coming out, including the California Consumer Privacy Act, which has come out of the US and is kind of leading the way for privacy protections here. In a similar vein, there's consumer rights, there's data erasure, data security requirements, and disclosures for cross-border data transfer. Unfortunately, though, okay, one sec. Compliance in a blockchain context kind of looks very different when we're talking about these distributed ledgers. Suddenly we have joint controllers. Essentially, if you're running a node, you are a data controller. We have ledger forever immutability, which is awesome for keeping records of things and of transactions, data replication, and seamless cross-border transfer of information, which is, okay, if I could kind of go back. Okay, there we go. Sweet, thank you. Kind of at a crossroads. Mark explained a bit of the fundamentals of zero-knowledge proofs, but essentially what this technology can do is come in and ease some of the tensions that we see between developing blockchains, including zero-knowledge rollups, and existing and up-and-coming privacy regulations, including implementing zero-knowledge proofs of data erasure introducing light clients and zero knowledge proofs of light clients to minimize data processing, and compliance verification for cross-border transfer. Hopefully these standards can also, as they're being incorporated into building blockchains, find parallels in existing softwares and other financial standards that are coming out. One day. Nice. Okay, so intersection with compliance. One sec. Okay, cool. What we're gonna see is a lot of know your customer, anti-money laundering, illicit finance mitigations, and basically prevention of unlawful activity, because this is kind of what we want. Regulators are scared that, as was mentioned earlier, people come into blockchains, grab a bunch of money, maybe even some unlawful actors have access to these technologies, and they are kind of using it for illicit gains. Well, the concern is, if we have zero knowledge, how will we ever be able to find out who is behind a transaction? So on the one hand, we have private verifiability of data and private verifiability of operations conducted on data, which is great for data regulations. On the other hand, we run into kind of mitigation of illicit activities on chain. So what zero knowledge proofs enable? Great for financial markets, great for anonymous trading, verifiable anonymous trading on chain, which eventually we'll get to T0. But some problems with regulators. There's a tension, privacy and maintaining customer records, transaction monitoring. There are some privacy protocols that are being built. Hopefully more will be built, including some that have an allow list approach. But eventually what we want to see is, as more financial institutions interact with blockchain technologies, they will begin to interact with a wide array of zero knowledge rollups and chains, which will all kind of post to the global trust layer, which is Ethereum. Ideally, we have infrastructure contractors that are helping out and have a knowledge of zero knowledge proofs and the regulatory landscape, and also kind of blockchain infrastructure to meet enterprise requirements around AML KYC controls, while allowing enterprises to access a lot of the developments that have come out of DeFi, which, while a small space, has already experimented with a lot of the things that have been brought up over the course of this conference, and very complex financial instruments. So yeah, there's work to be done. Cool.
Next, right?
Okay, great. So far we've had Quinn talking about algorithms, Maya talking about compliance. Now we're going to move to Yan, who's going to talk about payments.
Hi, my name is Yan. So Pelago Labs is a lab funded by a couple large cross-border payment companies. Our shareholders' annual transaction volume is about $100 billion. Companies like Amazon, Elon Musk, they are either our direct or indirect shareholders. So myself, as a co-founder, my research interest is very aligned with what Mark mentioned, like verifiable credentials, zero knowledge proof. I'm actually involved in a lot of standard organizations like W3C, Liquid Foundations. So the reason we set up the Pelago Lab is trying to explore the opportunities in Web3 payment, crypto payment. The reason we come to this conference, number one, we're trying to bring a lot of true use cases to ACTUS. At the same time, we want to see how the system ACTUS developed can be used in our situation to help us to solve the problems. Okay. Yeah, so basically right now, we trying to, Solana this year mentioned PayFi, it's payment plus DeFi. So we trying to provide the new decentralized infrastructure for PayFi. And the protocol we're releasing right now called Polyflow. Essentially, what Polyflow do, we all know Binance, Coinbase, and Uniswap. So they're a centralized crypto exchange who handle the exchange of crypto assets. But there are a lot of problems, custodian risk, blah, blah, blah. And the Uniswap, they come out with automated market making algorithm to handle everything in a decentralized way to get rid of the custodian risk. In the payment industry, actually the same risks exist. All the crypto payment processors, they are using a centralized wallet system like provided by Fireblocks, Blockdaemon. They're facing the same risk as centralized exchange facing. And unfortunately, the regulation is not there yet. We know the regulator is go after about the central exchange, but the payment processor still in its area, which is probably a little bit small, but no one really just go after that. So we are coming out a protocol similar to Uniswap to get rid of that risk. That's basically what the Polyflow do. So essentially, there's some problem with the text here. Essentially, Polyflow has two key elements. One is called PID. It's essentially the DID made for payment. What we do is provide on-chain KYC proof. What do you mean on-chain KYC proof? So using zero-knowledge proof and also MPC multi-party computings, we can demonstrate this particular address was KYC by a certain institutions. Like for this one, KYC by Coinbase, whatever. We don't know who is behind the address, but we know this address is KYC by Coinbase. If something happens, we can the regulator can go to Coinbase to find the information of the person who owns these addresses, but which allow this person to still participate with the DeFi protocols without sacrifice their privacy. The PID can also used for data labeling for AI analysis. So that's what PID does, payment ID. Another thing is called payment liquidity pool. Essentially, it's a similar liquidity pool like Uniswap, but it's different mechanism. Uniswap is like a swap. You have two different assets. It's a payment process. We try to get rid of the process which require the payment processor to use a centralized enterprise wallet, typically provided by Fireblocks or Blockdaemon. Then they can do all the transaction on-chain or handle all the payment transaction on-chain. At the same time, privacy is critical because all the payment information is business secret. So we need a robust way to make sure, yeah, the transaction on-chain, all the information on-chain, but the privacy is preserved. I use the technology like W3C made like verified credentials combined with zero-knowledge proof to solve that problems. End of the day, we're able to make sure the information flow is independent from the fund flow in the payment process. The existing payment processors, they are still going to handling the information flow as usual. And the fund flow will be handled by an on-chain smart contract based protocol. So get rid of all the custodian risk and make sure they're compliance friendly because everything is not black box anymore. Like the problem with all the like Coinbase, Binance, this central exchange, if you handle all the fund flow and information by yourself, then to the regulator, everything is black box. They have to send someone into your organization to check what's going on. But with our approach, because the fund flow is on-chain, so essentially, the regulator is able to use AI, to use big data algorithm to do analysis, find these things. Yeah, so that's basically what we do. And the key technology we're using is DID and the verified credentials. We know in the past 2 years, W3C, we released 2 standards. One is for DID, one is for verified credentials. myself is in the working group, and also the zero knowledge proof, which we discussed, and the multi-party computing, really for privacy preserving. Yeah, so that's my introduction.
Thank you, Jan. So we've got, I spoke about blockchains, Quinn spoke about the algorithms, Maya about the compliance, Jan about the payments. Doesn't really matter, right? That's just like more tech, more tech, more tech. But we really want to have real world impact. And so let's bring it all together and talk about a microfinance platform that's going to leverage this tech. I introduce Melina.
Hello, everyone. I'm Malini Srinivasan. I'm the founder of Flinder. I'm not going to give too much of my intro in the interest of time. At Flinder, we have built 3 blockchain-based platforms. And across the 3 platforms, we have more than 20 plus live implementations. This is a broader partner ecosystem. We have received multiple grants from prominent donor agencies. And here with Casper, we have collaborated in building and rolling out eventually a microloan platform, which is adhering to ACTUS contract terms. One of our live implementations is we rolled out a parametric insurance product in 2 countries in Caribbean. Where citizens typically from low-income community are able to purchase coverage against hurricanes. The actors involved are individual citizens, insurance distributors, weather data source providers, and the risk modelers. And in an event of hurricane, if the payout parameters are met, which is determined by the speed of the hurricane and the distance of the hurricane from the land, an automatic payout trigger is generated by a blockchain-based smart contract directly to the citizen, which enables them from faster recovery from the peril. Looking into the ACTUS-powered microloan platform itself that we are working to roll out, the actors involved are lenders, such as micro entrepreneurs, financial institutions, borrowers such as farmers and citizens from low-income community, loan agents such as local NGOs, local loan officers. And the core platform itself is structured in such a way that it is adhering to ACTUS PAM contract terms, where the principal amount itself is paid to the borrower by the lender on loan origination, and is completely repaid by the borrower to the lender at the end of the loan term. And frequent interest payments is defined as per the PAM contract initial terms. Sorry, okay. Diving deeper into the platform interaction view, interaction flow, as a borrower, the borrower is able to onboard themselves onto the platform, complete the KYC. They're able to explore all available loans. They're able to apply for loans. They're able to obtain loans. They're able to pay loans online. And they're also able to see any outstanding payments, how many payments they have made, how many total number of loans they have signed up for. As a lender is able to create and list a new loan. Again, each of the parameters maps one-on-one to act as PAM contract terms. And lenders able to view the listed loans. They're also able to receive periodic payments from the borrower. They're able to see the dashboard view. They're able to see the total amount of loan dispersed, total amount outstanding, the amount that's available for lending. Loan agents are basically liaison between the borrowers and lenders, and they help facilitate the loan because typically borrowers, they belong to low income community, and they come with very, very low technology sophistication. The whole core platform itself enables actors to perform seamless microloan transactions, which is powered by ACTUS and defined in blockchain. The platform also helps in generating transparent regulatory transparent compliance reports that's meeting the regulatory, aligned with the regulatory requirements. Here's the quick view of some screens that we rolled out for market study. This is a borrower view where borrower is able to explore the list of loans. They're able to repay loans. They're able to apply for loans. This is the dashboard view where borrower is able to see how much money is outstanding, how many loans they have signed up for. A lender view, again here a lender is able to see the loans that has been listed, create or list new loans and adhering to ACTUS PAM contract terms. Lender dashboard view where they're able to see the disbursed amount. Sorry, there is a there's a typo on the slide. It has been corrected in the next version of the UI. So they're able to view the disbursed amount. They're able to see what's the remaining amount that they're able to lend. This is the basic core platform architecture, which basically maps the user interaction layer to the underlying blockchain network. Though the core platform currently maps with ACTUS PAM contract terms, but it is easily extensible to other contract types, ACTUS contract types. As next steps, we are working on to roll out the microloan platform in India and Caribbean. We are looking to build and expand product lines and map it to other ACTUS contract types. We are looking to collaborate with Casper to roll out for easier rollout of blockchain-enabled ACTUS contracts. Also, to contribute to ACTUS ecosystem, like creating a new contract type for parametric insurance that I spoke about earlier. Thank you.
Thank you, Millie. Thank you. So, kind of important point to note there is that the users of that platform will not know that ACTUS is inside it. They will not know necessarily that blockchain is inside it. But it is there. It will be a compliant platform, and that is super important. Otherwise, it will not scale. So I've got a bunch of questions. I'll kick off with a couple, and then we can go to the audience. How long do we have, Alan? Just 5 minutes?
At this point, I was going to take a vote on the board members. Shall we decide not to subject anyone to our final comments? No. What? Okay, go ahead.
Okay.
We have one more substantive session for the program.
Okay, so here's a question. So how can partnerships between DeFi projects and traditional financial institutions benefit the overall financial ecosystem? And I'll give that one to Malini first.
Yes, sorry, can you repeat that question?
Sure, yeah. How can partnerships between DeFi projects and traditional financial institutions, e.g. banks, insurance companies, etc., benefit the overall financial ecosystem?
Yeah, so with DeFi products, especially if it is deployed in blockchain, it is completely transparent to all the actors, right? So in the example of parametric insurance, the insurance distributor, the risk modeler, and the citizen itself, they're able to see the exact same view of data, same view of transaction that has been performed. And in an occurrence, on the occurrence of an event, they exactly know what are the parameters that determine the event, that determined the payout trigger, what amount was transferred. Everything is completely transparent and legit. It's the same across all the parties. You know, it makes it easier for again, like regulatory reporting or compliance audits, etc.
Okay, thanks. Here's a question for Jan. How does the integration of AI and machine learning enhance the functionality and security of DeFi platforms?
Yeah, I'll share with you guys a story. Like 2 weeks ago, we have a sampling of transactions internal, like compliance department. So oftentimes we sample because they are customer onboarding with our payment rails. They report they do something, and sometimes they cheat, and we always do sampling to catch it. We asked one of our compliance managers, say, okay, this customer has a problem. How do we deal with it? He said, oh, we're going to hire more people to keep tracking down their transactions. We're kind of get irrigated because you have 100 million of transactions a day. How can you just rely on human beings to monitor transactions? So you have to rely on AI and big data to do the analysis. I think that's very important. We have to move with the number of transactions going up. We have to move to AI and big data. At the same time, these days, a lot of people, when they do on-chain transactions, the only consensus is whether this crypto is contaminated or not, is whether this crypto will be frozen by a central exchange like Coinbase. If they frozen this crypto currencies, which means they're contaminated. But the reality is you should try to use something like situational awareness, this algorithm, to really detect that and try to prevent these things even from happening. Because if something gets frozen, a lot of innocent victims as well. I think overall, the reason another thing we are doing TriTo is separate the information flow from fund flow. Is historically all the data is fragmented, held by different institutions. So they have all the fund flow information to themselves, and they can only do AI to themselves. There's no crosstalk. So when you separate information fund flow and you create opportunities and environment for everyone to apply AI and big machine learning algorithm to do broad data analysis to provide the entire on-chain situation awareness. So from that perspective, I think from AML perspective, the regulator shouldn't be worried about crypto. Actually, so I think crypto could be more AML friendly, because right now, like you have Bank of America and DBS in Asia. I mean, I guarantee you, they won't. Like people, we try federal learning, try to get the data from different banks, calling it to do some analysis. It just never happened. All the AML analysis is still based on individual bank itself. But with the DeFi, with crypto, you have opportunities. You can do crosstalk. It gives you large data set for you to do analysis. As long as you get a privacy protection in place, long term, the crypto stablecoin based global fund flow should be more clean than traditional ways.
Thank you. Do we have any questions from the floor at all for any of the panelists? Not so. Let's ask, Maya, how do you see DeFi reshaping the traditional finance landscape over the next 5 years? Bit of prediction time.
That's a great question. Well, I think actually going back to something that was shown earlier, I believe it was by Francis, of kind of how there are layers to this. There's kind of the human layer, there's the contract layer, there's a layer deeper, kind of all of these things that touch reality. DeFi and anything built on top of blockchain technologies are just a new primitive for computers to communicate between one another. To communicate between one another and to incentivize each other to perform certain workloads. Currently, they're being incentivized to perform financial workloads, but as Jan was saying, they can also be incentivized to perform machine learning and other kind of coordinated computer activities. In the way that I see DeFi right now is kind of a sandbox to be playing around with a variety of financial primitives and a variety of ways to create value through coordinated computer activity, which could maybe enhance payroll systems or could, lead to really lucrative advancements in machine learning and computing and so on. So when I think the traditional financial system begins to interact with DeFi, what we're going to see is just more influx of capital. So more influx of kind of compute abilities, more influx of computers, that will be able to perform like even more complex workloads and support the next generation of financial infrastructure. I think we're going to see a lot more experimentation in terms of how banks manage internal processes, which will be aided by on-chain AI and advancements there, but also just pulling from the DeFi ecosystem and contributing to these networks of trust to, yeah, perform all sorts of various interactions with computers and with human activity.
There's a question from Francis over there.
Yes, well, I really like your presentation.
Thank you.
What I see happening now is a bubbling up of activities everywhere. And what we need, my view, is a platform, a global platform, interoperable across the globe, however it's organized. What we risk now is that you have a lot of blossoms of DeFi and blockchains and whatever, reaching kind of industrial size. They will create industry associations, they will create their lobby groups, and by the time the regulators understand what's happening, it's too late. We have the next generation of legacy. So what would you think about launching a dialogue between classic finance, banks, other industries? Recently I was at the Commodities Trading Week in London. That's a whole different world, but they need our stuff as well. The world of DeFi and the public sector, identifying there the people who think technology. We have too many lawyers and economists, with all due respect to them, but it's a monoculture. Too few people in the policy process who think technology and who love technology. So we need such a dialogue. How could we launch that?
I think, I'm head of R&D of one of these kind of foundations, right? And what I've noticed is the foundations don't collaborate that much amongst themselves. So that's an impediment right there. They need to grow up a bit, I think, and understand that they need to work together and then build relationships as a collective with regulators across the world, with institutions such as ECB, BIS, etc.
Foundations is just another centralized top-down logic that introduces the same problem. That's not the way forward. Sorry.
Okay. Yeah, Mike?
Yeah, I mean, I would say like, look, a lot of DeFi that's launching, it's kind of finance from the ground up. Finance is just these systems of trust, and especially in countries that have had traditional systems of trust routinely shattered and subject to shocks, they see kind of, they leapfrog to these technologies and they set up their own systems of trust, which begin to coordinate human activities. The thing there is, right now, we're not kind of offering them an incentive to play with regulators, right? They come from a different regulatory landscape, and part of their adoption of DeFi was actually a reaction to a lot of laws, policies, and regulations that came from primarily Western countries and that failed them in their economies. If we're to have a dialogue, then I think what we also need to do is acknowledge these kind of systems of trust and maybe, begin to offer incentives, begin to show like genuine interest also in the technologists who are building these things and say, hey, actually, we have a ton of resources that could translate into compute and into better coordination. But until we're willing to meet those projects there, they have no incentive to kind of cooperate with us. They're a reaction to us.
I mean, how would you achieve that? Making sure you don't have an actor from a section country sitting in your DeFi environment somewhere, and you're sponsoring a terrorist from Hamas, you're sponsoring Iran, you're sponsoring North Korea, and that's the issue our regulators are having, right? So right. That's their dialogue. So it's clearly there's got to be a balance, but without getting digital identity to know who's that side, you cannot tell who's that person.
So I mentioned in my presentation, there are various privacy preserving protocols
Exactly.
that
Yeah.
can offer DID.
I mean, ZKID is a big thing. There will be, in a very short time frame, multiple identity systems where that really are information shielding first. And, I've got quite a lot of confidence in that. But they need to be leveraged correctly, obviously. But I take your point, absolutely. I mean, even in our organization, we have people who are citizens of sanctioned countries, but they're just legal citizens, so you just happen to come from those countries. You know what I mean? So it's a tough problem to crack, and yeah, there's a lot of nuance involved.
So just like AI cannot be governed by top-down centralized organizations, and there has to be an open source initiative for AI, Imad Mustak, Stability AI, I think there's consensus building on that now, right? The same applies to financial regulation, long term. It's hard to say that in front of an audience like this. I get it. I'll still say it. That's what's needed long term. And so when we talk about privacy tool sets, et cetera, the key is, just like ACTUS is a great startup. Imagine ACTUS had a community coordination tool set built into it. That's what we need to talk about, in my humble opinion.
Well, we have proposed building an ACTUS-specific blockchain and put, to the service of the ACTUS Foundation. So that will be not just a toolkit, but the fundamental basis of such a kind of toolkit, I suppose. I mean, I would love to see a special purpose blockchain operated by regulated entities across the globe coming together, and particularly focusing on that integrity layer. Yeah, because on chain is just cryptographic proofs, and they should be privacy preserving, and you should be able to deconstruct the portfolios if you have access to the original data. But you need to have confidence through the proofs that you are getting the original data, for example, and those cash flows were executed or derived correctly. So that that's the kind of idea that we have. Anyway. So, are we good? Thanks, Helen.
One more question. Two more questions.
So another question, Henry.
Two more.
Two. Oh, sorry. We went from none to like loads.
I have a very specific question. Would it be possible with this method to construct a system that automatically issues financial products? So, I mean, if we can build them on the blockchain, let's say represent them in ACTUS, I think specifically of structured products. So it would be great to simplify and automate the process of issuing.
Yeah, right. So dynamic hedging, and in the hedging itself, there's instruments being automatically issued. Yeah, for example.
My suggestion is we're going to have a reception
Yeah,
after the next program, and there's going to be lots of opportunity to ask questions. Thank you.
Thank you so much.
Great.
Thank you.